Kiddie tax is Congress's way of stopping parents from shifting investment income to kids in lower brackets. The key idea is simple. The child's earned income, like wages, is taxed normally to the child. But certain unearned income, think interest, dividends, and capital gain distributions, can get pushed up to the parent's tax rate once you cross the threshold. On the EA exam, they love testing earned versus unearned. For 2024, the magic number is 2,600 of unearned income. Here's the mechanic. The first 1,300 is sheltered by the child's standard deduction effect, so it's essentially not taxed. The next 1,300 is taxed at the child's rate. Only the unearned income above 2,600 is taxed using the parent's rate through the Kiddie tax calculation. If the child's unearned income is 2,600 or less, Kiddie tax doesn't apply. Now the exceptions. These are easy points if you memorize them. No living parents at the end of the year. No Kiddie tax, even if the child is a dependent. No unearned income? Then there's nothing for Kiddie tax to hit. And a big one. If the child is married and files a joint return, Kiddie tax does not apply. The exam will try to distract you with age, but MFJ is the clean-off switch. When Kiddie tax does apply, remember what gets taxed at the parent's rate, only the unearned income above the threshold. The child still has their own return, their own earned income taxed at their rates, and their own standard deduction rules. A weird side note, a child could also owe net investment income tax, but only if their net investment income is over $200,000 for a single filer. Rare, but the EA exam likes to mention it as a curveball. Reporting is where students mix up forms. The default is, the child files a return and attaches Form 8615 to compute the Kiddie tax. But sometimes, parents can elect to report the child's income on the parent's return using Form 8814. That election is limited. Generally, the child must have only interest, dividends, and capital gain distributions. If the child has wages or other income that needs reporting, you're usually back to the child filing their own return with Form 8615 if the Kiddie tax applies. Use this quick decision rule on exam day. Step 1. Does the child have unearned income over $2,600 in 2024 and no exception like MFJ or no living parents? If yes, Kiddie tax is in play. Step 2. Can the parents use Form 8814 only if the child's income is limited to interest, dividends, or capital gain distributions and the parents want to elect it? Otherwise, it's the child's return with Form 8615 attached. Marcus and Elena filed jointly and claimed their 10-year-old son, Noah. Noah inherited investments that generated $4,900 of interest and dividend income, and the facts say it's subject to Kiddie tax. The parents want to report Noah's investment income on their own return instead of filing a separate return for him. Is that possible? And if so, which form would they use? Think about it. Yes, it's possible. The correct choice is using Form 8814, the parent's election to report a child's interest and dividends on the parent's return. Form 8615 is the Kiddie tax form, but it's attached to the child's return, not the parents. A tempting wrong answer is picking 8,615 because you associate it with Kiddie tax, but it's the wrong return. Sabrina is 17, a high school student, and her parents claim her as a qualifying child. She earned $6,500 in wages from a part-time job and also had $5,200 of dividend income from inherited stocks. Is Sabrina required to file a tax return? And if so, why? Look for the best reason among the choices. Think about it. The correct answer is that she's required to file because her unearned income is subject to the Kiddie tax. With $5,200 of dividends, she's over the Kiddie tax threshold, so Form 8615 comes into play on her return. A tempting wrong choice is the standard deduction explanation, but this question is testing Kiddie tax logic tied to significant unearned income.